Stuart, I really appreciate you taking some time to talk with me a little bit today about the Foreign Account Tax Compliance Act. Wanted to speak specifically from an industrial products and services perspective. So would you be able to give me a sense, when many people hear FATCA, they tend to think about financial services companies. From a industrial products perspective, what do we think is the most important aspect that we need to stay focused on when we think about companies in those industries?
Many clients think that when they hear FATCA, it is directly related to the financial service clients and therefore doesn't impact them. If you go back to the basics, right, FATCA was part of the 2010 HIRE Act. When you looked at that, really the focus was how to get taxpayers that were perhaps hiding assets overseas, had their assets there and weren't reporting income. And what the IRS has found that by having compliant taxpayers, those that are actually reporting properly, is the amount they get their most tax receipts. Clients were actually surprised about provisions that were in the final regs that impact them. So when you look at our industrial products clients, for example, they need to think about this both from a basis of a payee and a payor, and whether or not they're doing things under FATCA, whether they're complying with the law, that will prevent them from having certain withholding on payments received.
So I think that broadly covers why it's important for why this is important for industrial product companies. What are some of the key provisions that we want people to be aware of as they think about FATCA and why it may apply to them?
And let's go back to the payee and payor function. So we have companies that have many foreign entities. The government is looking for those that are identified as primarily foreign financial institutions, or also known as non-foreign financial entities, NFFEs, and looking for them to do certain things. Number one, they're expected to register with the IRS to enter into an agreement with them and provide certain information on U.S. taxpayers. So when you think through the foreign financial institutions, very broad definition. Many of our clients have captive insurance companies. They have pension plans overseas that have investments in U.S. assets. Those are the type of common things that are captured. From a payor perspective, I'm going to want to know when I'm making those U.S. source payments to those foreign entities, do I have the proper documentation to determine whether or not I need to withhold that 30%? If our clients don't withhold that 30%, and need to, they become liable for that 30% plus the interest and penalties.
Not necessarily financial services companies, as we want industrial products companies to envision this, but they have to think a little bit about their structure outside of the U.S. They have to think about certain retirement plans, as you said, certain types of captive insurance companies. Could there also be implications where you have a potential foreign treasury center or a holdco?
You have all of those, and actually, Mike, you hit on the right thing. From a Treasury Center perspective, we see a lot of different complex transactions occurring in Treasury. That's one more area where you need to understand what those transactions are.
Given the diligence that must be conducted by companies, potential assistance they may require from outside professionals such as us, the potential registration with the IRS, there's no doubt that they need to think more about what type of preparation and analysis they need to begin sooner rather than later.
Yeah, Mike, this is one of those issues I think starts in the tax department. It's a tax law. However, very quickly, our members of the tax department will find that they need to have a cross-functional team. They're going to need to really build what's their steering group for success, because people are going to have to own this responsibility during the next several months as clients think through what are those legal entity analysis type work they need to do. How do they identify those entities that need to register? How do they come up with new forms and documentations that prove that they've entered into these agreements with the IRS and shouldn't have withholding?